All right. I believe we are live now. Hello, everyone. Welcome. Happy Tuesday. Hope you're having a great day so far. I'm excited to kick off our presentation today. My name is Heather Grant. I am one of the community admins at the Maintenance Community by Upkeep. Thank you, everyone, for being with us today. If you are not already a member of the Maintenance Community on Slack, we would love to have you join us. We will be sure to add the link on how to sign up in the chat in just a moment. Today I have James from Eruditio with me. James, thank you for being here. The recording from our session today, as well as the slides that you see here, will be available in the community Slack tomorrow. James himself is also actually available in the Slack to answer any questions if you do have anything specific to connect with him about. Additionally, if there's anyone else you know who would benefit from hearing more of James's expertise, please feel free to send them the replay of this webinar or the invitation to Slack as well. One final piece of housekeeping, and then we'll go ahead and get started. You'll notice that your cameras and microphones are not turned on today. So what you'll do if you want to ask or answer any questions of James is you'll use the chat feature on the right side of your screen here. Feel free to drop a hello and let us know where you're joining from as well. If you have any issues or anything like that comes up, please feel free to let us know in there as well. I'll be monitoring that throughout the conversation today and asking some questions along the way, but we should have some time at the end of our session as well to answer any questions. If we are missing anything or any questions that we don't get to, we'll answer those offline afterwards. And again, thank you so much for joining and being here. James, I'll hand it over to you to get us started.
All right, thank you, Heather. Welcome, everyone. Let's talk about everyone's favorite topic, spare parts. All right, usually it's on a lot of people's minds for a variety of reasons, whether we don't have the right spare parts, we have too many of the wrong parts, all those things that we deal with. As a result, we're going to kind of walk through some of this stuff. We're going to talk about how do we manage our spares proactively, how do we manage them based on risk, and that is really using the ABCs to manage your spare parts. Now, before we get into there, just introduce myself for those I haven't had an opportunity to meet, talk to, or be in the same room with in the past. My name is James Kovacevic. I am a principal instructor at Eruditio. Eruditio, we're based on the USS Yorktown in Charleston Harbor. That's where we have our office, our learning lab, all those great things. I myself am based in Canada, Windsor, Ontario, right across the border from Detroit, Michigan. A little bit about myself. I started off as an electrician. So worked as an electrician building automated equipment, kind of moved into a maintenance supervisor role, maintenance planner. And during that maintenance planner role, I had to learn how to set up a storeroom. I'll be honest, I did a lot of things I probably wouldn't do now, but it was a great learning experience. From there, I continued to grow, worked with a large multinational spending time in Africa, Europe, South America, and Asia, implementing maintenance and reliability best practices. And I joined Eruditio about 3.5 years ago now. Aside from that, 3 crazy kids and 2 crazy dogs to keep us busy. And you can also hear me chat with other maintenance and reliability experts every single week on the Rooted in Reliability podcast. You can find that on iTunes, Stitcher, Spotify, and a few other different locations. But that's enough about me. Let's talk about why we're here. Let's talk about spare parts. And let's start with really, why should we care about spare parts? I'm sure you can relate to many of the things on the screen here. 97% of lead times in our CMS are incorrect. So how are we supposed to stock the right number of parts if we don't know what the true lead time of the part is? And if that lead time has a wide range, how do we account for safety stock? How do we manage that? Looking at some of these other things here, 50% of open work orders are typically waiting on parts. So we're trying to use a just-in-time delivery of our parts for corrective work. That's ideally what we want to do. But if we don't have right lead times, we have a lot of stuff that we're scheduling and not executing on time. Also, if these are PMs or other types of planned work that we're supposed to be doing, are we not supporting it correctly with the right min-max? So lots of different things going on. We look at order quantities are wrong. So when we reorder the spare parts, do we order them one at a time in lots of 10 and lots of 20? 81% of the time, we're not doing the right thing for the business there. And we're going to talk about how to fix some of that. 62% of order points are wrong, meaning your mins. When do we trigger that reorder? Really, that min should be enough to cover us through the lead time and reorder time to get that next batch of parts in. If we're too low, end up in a stock out position. If we're too high, we might be carrying excess stock and costing the business money. 8% of our SKUs are duplicates. I'm sure many of you can relate to this. We can look at our CMMS and look up a bearing, and you're going to see that bearing in there under an SKF number, an NTN number, an NSK number, and probably a host of other OEMs, but it's all the same bearing in reality. 25% of the time is spent looking for parts. Generally, our mechanics and electricians and others spend a lot of time looking for parts, looking for the right parts. They got better things to do with their time. I have not met a maintenance manager that says, I have enough people. Everyone tells me they don't have enough people. So what if we could give back that 25% of time that's spent looking for parts? And then lastly, 30% of the stock in our storeroom will likely never be used. Now, why is that? Could go bad in the storeroom. We have to dispose of it because it has defects. It might be parts we never really needed to stock. It might be insurance spares that we've ordered just in case, but now that project and that equipment is over, we no longer need those parts. So there's a variety of reasons, and we can help mitigate some of that. Now, all these things going on in your storeroom, if we take a risk-based approach and we put a little bit of formulas behind it, we can reduce the impact these are having on our business. Now, if you have questions as I'm going through this, by all means, throw it in the chat box and I'll answer as we're going. But we have this from a maintenance and reliability standpoint of what's impacting us. Why do we care about spare parts? But there's another group that really has an interest in spare parts, and that is finance. Now, why does finance and accounting care about our spare parts? Why are they always telling us, you have too many spare parts, you have slow moving parts, you have all these other things going on? Well, really, it comes down to return on asset, ROA. And that is really a metric that looks at how good are we as a business at taking our assets and turning it into revenue. All right. Now, the way we calculate that at a high level is we look at income divided by assets. It's that simple. All right. Depending on your industry, you'll either have a higher percentage or a lower percentage, that sort of thing. But it's a good indicator based on your industry of how efficient and effective you are with your assets. Now, the reason why finance has a concern is down here in the asset column. All right. Down here in the asset column, any spare parts that we have sitting in our storeroom are considered an asset. Therefore, it's going to inflate our asset base. So if we have a lot of parts down there that are not being used, not being consumed, that's going to make our assets look higher. Our income's not going to get any better as a result of that. As a result, our ROA is going to come down a little bit, and that has an impact on Wall Street and various other metrics. In addition, if we don't have the right spare parts, we have a lot of stuff not moving, are we able to meet our plant capacity requirements? Meaning, are we going to get that right amount of uptime, or are we suffering from a bunch of different downtime because we don't have the right parts? So as a result, finance is concerned about that as well. So finance really cares because how we manage our parts is going to have a significant impact on our assets as well as our plant capacity. But there's one other reason why finance and others really care a lot about managing spare parts, and that's what I'll call the hidden cost of spare parts. Now, the hidden cost of a spare part, there's a lot that goes into this. Now, there's two main categories, and you may have heard of these before, but there are things like carrying cost, also known as holding cost, and then there's ordering cost or PO costs. Now, these are all costs that the business pays to keep inventory on hand and then to order inventory. Now, let's take a moment and decipher carrying cost. Now, carrying cost or inventory cost, that is really the cost to the business to maintain that storeroom. All right, we're going to look at the salaries of our people that are inside that managing those parts. You're going to look at taxes. Now, taxes is probably the biggest component of this because you're holding that inventory on hand. You're generally taxed on it in most jurisdictions. So for example, if you have $1 million of inventory and your tax rate is 10%, you're automatically paying $100,000 a year on taxes on that inventory. Depending upon how big your facility is and if you've had to create other buildings, you might have building expenses. You might have lost opportunity costs. What I mean by that is if we have to borrow money to put spare parts in our storeroom, or we're using our working capital to put spare parts in the storeroom, what else have we have done with that money? Could we have invested in new products, better quality products, that type of thing? Obsolescence costs stuff goes obsolete. How are we managing that? Shrinkage costs, stuff goes bad. V-belts is a great example. If you have V-belts in your storeroom that are older than 5 years, chances are you probably shouldn't put them on the equipment for a variety of reasons, but those are probably going to go away. We're going to have to write those off. And then you may have different third-party costs depending on how you operate your storeroom. Now, carrying costs on their own generally will range in North America from 20 to 30% of your spare parts cost. So for example, we have $100 in our storeroom. It's going to cost us $20 to $30 to maintain that storeroom every single year. Now let's talk about ordering costs. Now, ordering costs are generally going to be, what does it cost to actually process a PO, do a purchase request, all those things. But what does it take to actually get the part ordered in on site, right? So that's someone getting a quote, someone comparing quotes, someone issuing a PO, goods receipting it, paying the invoice, those sorts of things. Now, generally, those will come down to the salaries of the people we're paying, office expenses, IT costs, administrative costs, legal costs, potentially if it's a larger contract. And you may also have banking fees, those sorts of things. Right? Now, you may be thinking, that's not much. That could be a small amount. Well, generally, in a lot of industries, it's not that small of an amount. It's $75 to $150 per PO on average. Now, we have seen some companies up somewhere around $250 to $500 per PO. We've seen others that get it less down than 75, for on average 75 to 150 per PO. So think about it. Every time we issue a PO, if we're ordering 1 or 2 parts at a time, it's 75 to 150 bucks to process that PO to the business. Now, a lot of companies try and get around that by stocking a whole lot of inventory. So instead of ordering 1 or 2, we're going to order 10 or 20. That's good and all, but if we don't turn it and use it on a regular basis, then we're paying taxes on that average inventory over the course of the year. So we're paying money on it sitting there. And then we got that 20 to 30%. Right? So there's all these hidden costs of spare parts. So we got to figure out, how do we manage our spare parts, both from a reliability perspective, from a business perspective, all those different things. Now, how do we do that? And I'll be honest, it's going to be simple. The solution to managing a lot of these things comes down to consistency and having a good process. That's it. There's nothing special about it. Most organizations I work with, they don't have a process for how to set up parts, how to determine stocking levels, those types of things. Most organizations, they take a guess, or they ask a mechanic, how many of these are you going to need this month? And mechanics, they'll say, if they need 2, they'll say 4 just in case. So then the storeroom takes that 4 and they double that again, and that's going to be their minimum. And then they'll double it again, and that's their max. There's a lot of tribal knowledge, subjective analysis taking place to determine what those min-max levels are. But there's a better way. It's a standard process like you see on the screen, right? And to do this, we're going to use the ABCs, all right? We're going to use the ABCs to help us determine, should we stock this? And then once it's stocked, we're also going to use the ABCs to help us determine, is that the right way to manage this spare? Is the way to manage the spare evolving over time because we're using more or less? They're more or less critical. We're going to talk about all those things. But you need a simple process, right? First thing we want to do is when someone wants us to stock a part, we got to ask ourselves, is this already stocked? It sounds simple, but with those 8% of duplicates, we want to minimize those and weed those out. If it's not already stocked, then we got to gather some preliminary information. We got to understand the material as well as the vendor. So what's the lead time? What's the price? Does our vendor carry this on the shelf? All those different things. We need to know that to do a proper analysis. Then we're going to conduct a stocking analysis. And this is going to tell us, should we stock it? Should we stock it with safety stock? Is it a non-stock and order on demand? Those types of things. Then from there, within that stocking analysis, then we'll apply some formulas to decide what is the min, max, safety stock, all those different things for our spare parts. From there, the storeroom's going to provide a stocking recommendation. And generally, that's going to be approved by a maintenance manager or someone else. And then we're either going to revise the stocking levels or set up the stocking levels for the first time. All right, it's really that simple. But let's get into the ABCs. So the first thing we want to do is we really want to understand, do we want to stock this part? Right? And to do that, we're going to use the ABCs to categorize our parts and decide if we're going to stock them. Now, we're going to use 3 categories. We're going to use lead time. How long does it take to get this part? We're going to use consequences of stock out. So what's the financial impact to the business if we don't have this part? And then what's the consumption rate of this part? Now I'm going to talk about lead time first. Now lead time, it's not just the vendor says it's going to take 5 days. What I mean by lead time here is, how long does it take from us as an organization recognizing that we are out of this part to when it's received on site and put away in stock? So you got to think about it. How long does it take to review that report of all parts that need to be replenished, convert those to purchase recs, POs, all those things, plus the delivery time for the vendor, plus how long does it take us to get that part from when it's received into the proper location in the storeroom? So we're really looking at any ordering delays, good receipt delays, plus the delivery lead times. That is what we want for lead time. Now, these are our generic recommendations for different categories of lead time, and every industry and every company, and even depending on where that plant is located, these may change based on your needs. So feel free, if you're going to use this, to adjust these frequent or the definitions here of greater than a month, between 1 month, 1 week, and less than 1 week. But what we're going to do is we're going to ask ourselves, with a bearing that we're going to use as an example, how long does it take to get that bearing? Is it between 1 week and 1 month? If the answer is yes, then it's going to be a B. If it's less than 1 week to get it, then it's going to be a C. Then we're going to do the same thing for consequences of stock out. If I don't have this part, what is the impact? So for example, if the lead time is 5 days and the consequence of not having this part is $200 per hour, $200 times 24 hours times 5 days is $24,000. That's the consequence of not having that part. So in that case, it falls in the B category. Then we have the consumption. How often are we using these? Really over the course of the year. What's our annual consumption rate? Is it less than 2, between 2 and 5, greater than 5? And you may customize these for your business as well. Generally for this, we want to use history. Now, if you don't have good history or it's a brand new asset, might look at the probability scores within an FMEA, pulling in some of that reliability engineering work to help us establish what are we likely going to use over the course of a year if we don't have that history. Now, one other thing before I move on. A lot of organizations and companies I work with, they spend a lot of time on that lead time piece. You know, vendors don't give us accurate lead times, or they're not going to give us the lead times for our 5,000 parts. How do we get that? Well, if you're using your system properly, what you can do is you can look at your PO issue date and your goods receipt date. Subtract that, and you got the difference, which is really your lead time. All right, so that's a good way to start if you have that data within your system, but you don't have accurate lead times in the material master. All right, so if we walk through an example, if we have a part that has a lead time of 18 days, consequence of $50,000, and we consume on average 10 a year, we're going to get a ranking of 18 days, so B, 50,000, B, and greater than 10 years, an A. So we got that. What do we do with it? All right, so there's some things we're going to do with this now. So we're going to take that unique combination and we're going to compare it to our master key. Here you can see lead times, consequences of stock out, consumption ratings. What do we recommend? Is it a stock or non-stock item? So BBA was the example that we used previously. So we take a B, and an A. Here we get stock. Perfect. We know what we're doing with this part. We are going to stock this part within the organization. We haven't decided what quantities we're going to stock yet, but we know we want to stock it. The other thing I would suggest, if it's a B in a stock, we're just setting it up as a regular stocked item. If it's an A stock, we may want to consider safety stock depending upon the consequence of not having that part. All right, so if it's an A, consider safety stock. If it's a B, we're just going to set up stock as normal. Now, for example, if we have an ABC, that's going to equal a non-stock. All right, so we're here, ABC, non-stock. Those ones, we're going to order on demand. All right, that's how we're going to approach this. We want to use this as a starting point to establish, do we stock or do we not stock? moving on from there, you can see we continue on with the C's there. So in the slides that you guys are going to get, you'll be able to see this and use those keys for yourself. All right. Now, if we have C parts, that's a stock. What I'm going to suggest is we don't want to go through the efforts of setting up mins and maxes and economic order quantities and all those different things. What we want to do is we're going to want to use a Kanban system as possible. A 2-bin Kanban system or a single bin Kanban. Generally, you see the C's move towards vendor managed inventory as well. Relieves your team of having to manage those parts plus not carry that inventory on hand. Now, once we have decided to stock these parts, now what we got to do is calculate the right stocking levels. And to do that, we're going to use some formulas. Okay. The first formula we're going to use is our minimum quantity formula. And to do that, we're going to take the usage per year. So what's our consumption for the course of the year, divided by 365 times our lead time in days. That's going to give us our minimum quantity, because really that's the expected amount that we're going to need to consume while that part's being reordered. Now, if you get an answer that's 0.5, 0.7, anything of that nature, organizations generally need to establish some sort of rule for rounding up or rounding down. Most organizations I work with, they round up regardless. So if it's 0.1, they're rounding up to 1. If it's 1.1, they're rounding up to 2, and so on and so forth. So you guys are going to have to establish some basic rules like that for rounding when we use these formulas. Now, if our usage per year isn't generally that, say we're using 1 every 2 years, then we would just use the decimal equivalent. So 0.5, for example, of a part we use every 2 years. That's going to give us our minimum quantity, or a reorder point, if you will. Now, to calculate our max, we need to use something called economic order quantity. Now, economic order quantity, that is a process and a formula to balance what our inventory carrying cost is and our ordering cost is. It allows us to strike that balance so we're not over or under ordering those, and we're minimizing the total cost of the business, minimizing taxes where possible while offsetting purchasing costs. All right, we'll walk through some examples of these next. From there, we're going to take and calculate our maximum. Now, generally what we're going to do, it's going to be a min plus the EOQ. Now, depending on which CMMS you're using, which system you're using, you may have a min and a max only. You may have a min and a lot size. You may have all three. So you got to make sure you understand your CMMS and how these different fields work. If you have any questions about that afterwards, I'll be more than happy to help you with that. But sometimes you only use the min and the EOQ, and it'll automatically calculate the maximum. Sometimes you need the min and the max, and it'll calculate that EOQ for you. So you got to know your CMMS. Now, let's do an example with this. One other thing real quick before I forget. For minimum quantity, if you use these parts in a specific quantity, for example, you always change these out in pairs of 2, then you have to create that in your formula to round up to what that standard issue quantity is. If not, you might be at risk of not having a full set when you go to perform a repair or something of that nature. So make sure you include the number in that sets or pairs that you're changing out at a specific time. So, as an example, we have a company that consumes 30 bearings in 1 year, which costs each $25. The lead time is 7 to 10 days, the carrying cost is $24, and the PO cost is $100. So let's calculate our min. We'll throw it in there. 30 divided by 365 times 10 equals 8.2, gives us 1. So our minimum is now 1 for that bearing. We're going to populate our EOQ formula. So you see 2 times our annual consumption times our PO cost, which is 100, divided by the cost of that part times the carrying cost, 24%, gives us 31.6, roughly 32. So now we got our min of 1 plus 32 EOQ gives us our max of 33. All right. So this is how we go about setting up the min and max of our spare parts. Now, I know a bunch of you are probably thinking there is no way I am going through all those formulas for every single part I want to set up or every single part I have to review. I don't blame you. What I would do, make it simple, make it easy, create a spreadsheet. So in a past life, when we were doing this and we were using these formulas to optimize our existing spare parts quantities, we actually were able to export a couple of reports from SAP into a spreadsheet, and we had a spreadsheet that pulled all that data and populated for us in a calculator, which did all the math for us. So definitely want to leverage an Excel calculator if you can, something of that nature to make this easy. If you don't make this easy, many people aren't going to do it, and they're going to go around that process, which defeats the purpose of what we're trying to do. Right? Now, so far, we've talked about how do we select the right parts to stock, how do we set the right stocking numbers, those types of things. We haven't talked about how do we manage these parts after they're set up, because lead times may change, usage may change, criticality may change, those different things happen. So how do we continue to evolve and manage these parts appropriately? And that's where the more traditional ABC analysis comes into play. So the ABC analysis, many of you are probably familiar with this, but it's an inventory control method used to optimize inventory levels and how we really manage our parts based on an ABC classification. The idea here is to distinguish between the trivial many and the vital few. It also reflects the Pareto principle, and you'll see that in a moment. The purpose of this is really to apply different policy settings for the inventory types. Once we have history, once we have consumption data, those types of things. Right? Now, to conduct an ABC analysis, a couple steps, and if you're lucky enough to have a system like SAP, for example, or some of the other CMMSs out there, they'll do this ABC analysis for you in the background just by running a report. Now, to perform this ABC analysis, we got to do the following. This will make a lot more sense when I go to the next slide and you can see all the info populated on the table. But bear with me for 1 second. First, we got to understand what the unit cost is and the usage is for each SKU over 12 months. All right, so what did it cost us? How many are we using? Then we're going to multiply those together to get the estimated annual usage to obtain the net value. So roughly, how much do we spend on each one of these parts over the last 12 months? Then we're going to sort them and arrange them in descending value. You'll see that in a moment. From there, we're going to accumulate the value and add up the number of items and calculate a percentage in the total inventory and value ended numbers. We're going to draw a curve, percentage items and percentage value, and then we're going to mark off some rational limits. So let's take a look at what this looks like. In this simple example, we have 10 SKUs, we got our cost per unit, and we see our annual demand there. Right? So now that we have that information, the next step is we've got to calculate what our total or annual cost is. You can see we multiply those up. You can see we get our total cost for each SKU over the last 12 months. And we're going to sort those in descending order. Now here's where the math gets a little tricky depending on how many SKUs you're dealing with. But what we want to do is we want to calculate the cumulative percent of total items. So given that this is only 10 items, each item represents 10% of items. So here you can see the top item here, it's only 10%. But as we go down the list, next one becomes 20, then 30, then 40, then 50. If these were, say, 20 items on the screen, each one would represent 5% of total items that we have set up. From there, we look at usage. So what percent of total cost here for each SKU is of the total? So $36,000 represents 48.59% of the total value spent through that storeroom over the course of the year. And we're going to go through and calculate this for each and every item. From there, we're going to do something similar to what we did with the items, but we're going to start running a cumulative total. So we see first item up, 48.59%. Now we take our cumulative, including the first and second item. So 48.59 plus the 32.39 gives us 80.98. Add the next 6.6%, come up to 87. Add the next 4.5, come up to 91, and so on and so forth. Right? So what we want to see at the end is cumulative percent of items equals 100, percentage of cumulative totals, percent, we want to see 100 as well. Right? Now, like I said, SAP will do this for you automatically as well as a couple other CMMSs. If not, and you need something, let me know. I got an Excel template I can send you for this. Same with some of the formulas and calculating those out. I can share that with you guys to make it easier. But reach out if you want to go through this. What we get at the end, after we do that ABC analysis, is we get something that looks like this. You can see what percent of our items are individually rolling out here. You can see our cumulative totals running up here overall. Now, when we set some rational limits, what you'll typically find is A's are going to account for about 70%, 80% of your SKUs, depending on how you rationalize it, and about 20% of your items. So in this case, we put a limit of top 20%, top 40%, top 40. Others may do 10, 20, 70. You can set out what these rational limits are to decide which category do you want them to drop into. And you can do that either based on percentage of items or percent usage. You can set it up either way. But here you can see, based on this, we've put items 201 and 202 into category A, meaning 20% of our items, but about 81% of all value flowing out of that storeroom. B's, we put these next four, 40% of our items, and 16% of the value flowing out of our storerooms. And then C, we put the last four, which represents about 2.85% of value flowing out of the storeroom. Right. Now, some of you are probably wondering, why are we doing this if we've already done the ABC before? The reason is, in reality, this is likely going to reflect more what's going on within the organization. We're going to have a lot more relevant data within the CMMS. And B, if you already have a lot of data in the system, but you've never gone through the process of doing the pre-setup ABC analysis, this will get you going in that right direction. So now that we understand, is it an A, is it a B, is it a C category, what are we going to do with this information? Right? Like we mentioned, we want to manage risk based on the category of item. So that's what we're going to do. We're going to manage these parts based on their ABC categories. A's, they're our highest priority. They're the most important thing we should have in our storeroom. So we're going to have the tightest control of inventory records. We're going to be looking at using safety stock, economic order quantity, as well as the MRP process within the CMMS to manage that stock for us. So we're not manually cycle counting. When we consume a part, it's automatically calculating, do we need to reorder? B parts only really become a priority when they're low out of stock. We're generally going to use min, EOQ, and the MRP to manage those parts. Not as important as A's, but still fairly important to the business. C's, they're our lowest priority of the parts. We're going to use basic min-max or Kanban methodology to manage those stocks levels. If we can, we're going to move it to a VMI or consignment process, that sort of thing. Now, this review, we should be doing it on a regular basis. Every organization will do it differently. Some will review all their parts using this ABC analysis every year. Some, what they'll do is they'll do it every 2 or 3 years. But then what they'll do is they'll review min-max levels for A's more frequently than B's, more frequently than C's. So they're using these ABCs to manage their spare parts very differently. Now, some of the different ways we're going to manage those spare parts is cycle counting. We may want to cycle count 10% of our A's weekly, 15% of our B's monthly, and 25% of our C's semi-annually. Because C's are low cost, not that big of a risk. If we don't count them all, it's not a big deal. They're usually nuts, bolts, washers, those types of things. A's, large gearboxes, large motors, very big concern if we don't have those parts. We're going to count those a lot more frequently. Right? Inventory optimizations, A parts. We may go through and reevaluate min-max and safety stock levels every 6 months for those. B's, every 12 months, and C's maybe every 24 months. When we're managing obsolete parts and obsolescence, we're going to try and get our A's written off first because they are highest on the books. They're costing us the most amount in taxes. So we want to get those written off ASAP. Now, from a VMI perspective, I would love to be able to get our A parts on a vendor managed or consignment process with a vendor, but it's difficult. But those should be our highest priority because they're very high cost. If they're not sitting on our shelf, we're not paying a lot of taxes on those. And then we're going to work our way down. Most organizations will put C's to VMI or consignment just for the simple fact it's easier to manage, not that we're going to save much money. All right. Now, from there, we got to make sure this is working. All right. So generally want to monitor a couple different KPIs within our storeroom to see, is this working? Is this making a difference? All right. So the first one is stock turns, and that's really determining the number of times inventory turns over the course of a year. We're generally looking for 2 or 3 stock turns per year, unless it's an insurance spare, one of those category A's, in which case we might be down about the 1 or less than 1 rating. But overall, we want to see 2 or 3 throughout the storeroom. Stock outs is a perfect balancing KPI to stock turns. Generally, organizations can make stock turns look really, really good. They just start stocking a lot less parts. But that leads to downtime, it leads to capacity issues, all these different things. So as a result, we got to balance it with stock outs. And stock outs is not every single SKU that's ever asked of us, but what SKUs have we set up within the storeroom with a min-max that are not available when needed? That's how we measure the stock outs. Might look at inventory accuracy. So when we cycle count our parts, how accurate are we? If they're not that accurate, then we got a problem with our systems. And by systems, I mean management systems. We're unauthorized access to the storeroom, stuff's not being signed out, to the work orders, those types of things. But we really need this to make sure, one, our inventory is accurate, so the formulas work. If we have really inaccurate inventory, those formulas aren't going to work because the system's not being notified when we stock out. How much are we consuming? All those different things. Then we may want to manage inactive inventory as well. Right? Inactive inventory is just how many parts have not been consumed in a certain amount of time. I think if you use the SMRP guidelines, I think it's 12 months. Some organizations will say 18 months or 2 years, but really, what percent of our inventory hasn't been moved or consumed at least once during that period of time? If it's a high level of inactive inventory, then we got an issue. We're stocking too much of the wrong parts really, and that should match up with our stock turns being quite low and stock outs being quite low as well. All right. So there's all these different things that we got to pull together to make sure that we get good performance within the storeroom. Now, how do we get this to happen? So there's a bunch of different change management tools. I'm not going to get into the details here of those, but what I'm going to say from a storeroom perspective, when you first move to using those ABCs to define stock or not stock, there's a lot of anxiety in organizations because in the past, we've always just stocked stuff just in case. But this is going to help us vet out what really is important to stock. Now, if we get one of those parts that's say non-stock, we got a couple things to do as a storeroom. We're not just going to say we're not stocking it and we're done with it. We need to have a plan for every part. What that means is if we're deciding to not stock this part, we need to recognize at least who's the vendor, what's the lead time, how do we minimize the risk of not having that part. It could potentially be, the vendor keeps it on their shelf and we can get it within a couple hours. It could be our sister site has it from 5-6 hours away and they can send it down. Or there's a workaround that maintenance can put in place till that part comes in. We need to identify what we're going to do if we need that part and it's not there. Now, sometimes that is still really hard for organizations to adopt early on. So then my recommendation, if that's the challenge, start with one on the shelf and prove that these other systems will work. All right, that we're recommending we're not stocking, but because of helping people through that anxiety, we're going to put one on the shelf, not 5, not 10, but 1. Show them that the system works and that you're not relying on that part that way. All right, that's like an emergency spare. The other thing I see a lot is when we start going through these min-max values and we start using these formulas, you'll see a lot of parts come down in total inventory. So maybe you're stocking 10 as a min, now you're on a stock 2 as a min. Once again, that gives a lot of people a lot of anxiety because in the past, they may have been yelled at or disciplined for not having the parts when it was needed, all those different things. So maybe what I've seen done sometimes is instead of going from that 10 to that 2, just take it part way, take it to 6, take it to 5, and prove that it works, right? Or do it with a small select group of parts. We're going to do these 200 parts, for example. We're going to revise them in maxes on these parts. We've reviewed them. They're low risk. Let's do it on those. What we're trying to do as we help with managing this change and moving towards a risk-based approach to spares is, build confidence in this new system, build confidence in the formulas and those types of things. And that's another point that I want to bring up is, we provide formulas here. We provide you a little ABC key, for example, for setting up parts. Those are going to have to evolve and improve with your organization as well. If you find that, we're consistently not stocking enough because our lead times are so variable, then modify those formulas slightly to give you the results that you need. But if everyone's using it, you can evaluate it as a system to decide, is this working, yes or no? If the answer is no, okay, where do we got to modify? We might have to change the ABC criteria in the front end, or we need to add a small safety factor to min because our lead times are so variable, those types of things. So, when we go to make this change, start small, build some confidence, build some trust, PDCA or continuously improve that system as a whole. And then lastly, document your savings. What we see in most organizations that adopt this type of approach, they generally come down in total inventory value. Now, it'll vary based on industry and location, but they'll see their total inventory value come down. However, what they will see is they'll see certain parts go up in stock levels. So the parts that mechanics are always complaining about that we don't have or we never have when we need it, we actually see those ones have a tendency generally to increase in stock levels. A lot of the stuff that we know we don't need, like EMT connectors and boxes and all those other things that we stock hundreds of for no reason, those will generally come down. But overall, you'll see a reduction in your inventory value. Right? And now you got finance on your side, which in a lot of organizations is a good thing. So if you can show these savings in a storeroom, then you can translate that and use those savings to help drive improvements in other locations. All right. So that is what I have for managing your spare parts with the ABCs. My contact information is up on the screen. Feel free to reach out. You can do it on the Slack channel. You can email, call, text, whatever works for you. More than happy to help you with any of this. But as we go through, are there any questions that I can answer for you guys?
Yes. Thank you so much, James. That was wonderful. Really, really awesome. I love to see, really applicable things throughout that presentation, like the formulas that people can use and the offer for a sample template. Definitely got people jumping at that offer. So I have a list of emails to send you for requests for that Excel template.
All right, perfect.
There were also some questions. I'll kind of work in a little bit of a reverse order here, maybe hitting on just a couple of things that came in right at the end there.
Okay.
There's a question around critical insurance spares. So what's the difference maybe between critical insurance spares versus non-critical insurance spares? And then can we call those class A?
All right, so critical insurance spares, they go by a lot of names. Some organizations call them critical, some call them insurance, some call them critical insurance spares. But those are the ones generally that you order that you hope you never have to use. They're that $200,000 gearbox. That specialty order takes 30 some weeks to get. We order it because we know the consequences of not having it, but we really hope we never have to use it. Those I would say are probably going to be your A's. Right. I've even seen some organizations which may change slightly. So I'll zip back real quick on the screen to maybe better explain this for you guys. I know visuals help me. So what some organizations do is they take these top two groups here, the AAA or AAB, and they define those as critical spares. And they treat those ones slightly different, meaning those ones are not included in regular stock turn analysis. They're not included in slow moving obsolete analysis, or they're defined as a critical spare and they set up safety stock for these top two as opposed to these bottom three. They've evolved to that using experience based on what type of parts are they seeing flag up in these top two categories versus the rest of the A's, that sort of thing. And that's where it becomes important to look at how do we improve this as a whole system that I mentioned towards the end of the presentation.
Awesome. Hope that helps to answer our attendees' question. Next question here is, how about the turnaround maintenance spares? Is it necessary to manage them separately?
Great question. So I am actually working through this with a client right now. They have a tremendous amount of spares that they rebuild, overhaul internally, and it's part of that inventory process. Interestingly enough, they're managing them the same way. But what they're doing is, instead of lead time, they're looking at how long does it take from when we pull it off the machine to when it's repaired and put back on the shelf ready for use. That's what they're using for lead time. Now, because in their instance, they're generally changing these out in groups of 4, 6, or 8, they're making sure that their minimum reflects that. So they're not just going to have a minimum of 1 when they're always changing them out in 4. They're going to make sure their minimum is 4.
Awesome. Another question here, how do we handle those vendor-dictated minimum order quantity parts?
Good question. If you are a smaller organization and you don't have a lot of pull with them, then you're kind of stuck with what that minimum quantity is. It's not ideal, but unfortunately, it happens in some companies, some industries, some vendors. So unfortunately, we just kind of have to manage that. What I would say is, keep an eye on it with your inventory values and do not overstock them.
Awesome. I have 2 more questions lined up here, but if there's any more questions out there, please be sure to type them into the chat as we are heading towards wrapping this up. Next question for you, James. Is it a good practice to put a specific maintenance purchasing department in place?
I have seen a maintenance specific department and I've seen a just general procurement department. I've seen them both work well. I think the biggest thing, in all honesty, goes back to 2 things. It comes back to having a defined process. So when we talked about having the evaluation process here, the flow chart, having that built out for when do we hand over from maintenance to purchasing, regardless of who that purchasing department is, when do they hand back, what reports are being shared back and forth, that sort of thing. That business process and a RACI chart, responsible, accountable, consulted, informed, is really what is going to make that work, regardless of if it's internal or external.
Fantastic. I'll switch us to a formula question, and then I did just see one more new question come in. This question is from Michael, asking a question on the EOQ formula calculation. It reads, when utilizing usage data from the storeroom, how do we capture the instances where we needed 30 but only had 21? How can we be sure for the need of 30 or any other item that was out of stock is captured in that EOQ calculation?
All right, good question. So if this is this micro rider I'm thinking that I work with from time to time, hey Mike, couple things. So that's where that subject matter expertise comes in. So if we know we always change these out in 30s, that's where we got to capture that in the minimum quantity formula. So we always have that 30 in there. So when we build our Excel template, some organizations will take the time to put in another column that says minimum issue quantity, and they'll put that 30 in there. So that way we always have that minimum amount to issue out. Now, how do we account for that in the past? That's where having some subject matter expertise working with the storeroom may help to flush some of that out and refine those numbers. But unfortunately, we really got to make sure we put that minimum usage quantity in that formula to make sure we can actually do what we need to do when time arrives.
Awesome. Michael says, good to know, thank you. Another question here that just came in, any suggestions on how to determine stock or non-stock if it's a new plant and the parts room is still being set up? We don't have purchasing history or usage yet.
This can be a challenge. Now, if we follow best practices, we should have FMEAs on the equipment for, what failure modes are we going to see? What's the consequence? What's the probability? How far, or what's our detectability rankings? All those different things. If we have those FMEAs, then we can leverage that to come up with a forecast of estimated parts that we're going to need to stock, that sort of thing. If we don't have that, as much as it pains me to say it, you're going to have to kind of rely on vendor recommendations. I would be pragmatic about it though. Look at them, say, does this make sense? And when I say make sense, maybe not stock 4 versus 5, but more so, do I really need to stock an extra surge tank, as an example? Because I've seen that on spare parts lists from vendors. It's going to be not easy. There's not going to be a nice process to it. But if you have the FMEAs, you can definitely leverage that. If you have a sister plant that has similar equipment, might not be exact, leverage that data as well. The vendor should be able to give you lead time and pricing data, though, to start with the formulas. It's just kind of figuring out what that usage is.
Awesome. I hope that helps. Alex says thank you. So that's all the questions that we've gotten in here. James, I want to say thank you again for joining us today. Really enjoyed your presentation, and the engagement from the audience, I'm sure, shows that they did as well. I do have a list of those people who are interested in that Excel formula, but if anyone else has any other questions for James, his email is available at the end of this slide deck, which will be sent through in Slack, and he's available in Slack directly as well. He's active on LinkedIn, so feel free to connect with him there too. And yeah, that's all for today. Thank you so much.
Thank you, everyone.
Thank you. See you next time.